You might find it hard to believe when I came back, Infosys went public in India and we came out of 30 crore market cap. Today it's some 10, 12 lakh crores out there. You have to look for unloved, underknown, underappreciated stocks. You don't want to be right, wrong. You could be wrong, right, and you'll be okay.
रमेश दमानी
स्टॉक मार्केट के सबसे बड़े नामों की जब चर्चा की जाए तो सबसे टॉप जो नाम आता है वो है
legendary Indian investor Ramesh Damani.
You say you have to be a risk taker.
When great opportunity knocks on the door, you can't be happy by buying 2% of equity or 5% portfolio. You need to back up the truck and buy. You can't put money when everything is lightened up and everyone knows everything. You have to put it when there's some uncertainty, when there's some doubt. In 2002-03, the Indian liquor business was available for 200 crores. So you could buy 10% of the liquor business for 20 crores. That was the price of a flat in South Bombay. And it was that cheap. Right? No one was willing to buy it at that point.
हमको कैसे पता चलेगा जो मार्केट है वो बुल मार्केट है या bearish market है?
The famous saying is the Panwala will tell you what tips to buy. Every bull market will end, will be followed by a bear market, will be followed by a bull market. And one more clue is the bull market is ending. You'll find that good news will come out. GDP has grown by 8%.
Would you rather prefer being a billionaire at the age of 70 or have 100 crores at the age of 25-30? हर आदमी की लाइफ में 2-3 ऐसी अपॉर्चुनिटीज आती हैं. लास्ट अपॉर्चुनिटी वो कौन सी थी आपकी लाइफ में?
Cannot become a billionaire by buying HDFC Bank at 12 lakh crore market cap.
Everyone is talking about India's story, sir. Do you have any contrarian bet around this thing?
That is a myth that people have. That अरे GDP डबल होने वाला है तो हमारा स्टॉक में भी डबल हो जाएगा, ट्रिपल हो जाएगा.
One thing that is common between Winston Churchill, Edmund Burke, George Hegel, George Santayana, and Karl Marx, they all said that if you don't learn the lessons of history, you are condemned to repeat it. And hence, today we are here with the lighthouse of Indian stock markets, one and only Mr. Ramesh Damani sir, to learn lessons about life and investing. Thanks a million times for doing this, sir.
It's always a great honor and a great joy to me to interact with young people. And, as you quoted a lot of famous people, Churchill, Santayana, so on and so forth. And I'll quote back to you Einstein, is that if any of us have seen further, it's because we stood on the shoulders of giants. So I've been a product, very lucky. I've been standing and seeing and benefiting from so many people. So I'm very happy to pass back a little bit more of what I have learned.
So there is no one better than you. You mentioned we are product of when we, see things from the shoulders of giants, right? जब आप 1989 में आए थे, you learned from the best of the best. Chandrakant Sampath sir, RJ sir, Ramesh Damani sir. Anybody who knows the story, any 20-year-old knows the story. Help me understand the insight and the genesis behind meeting certain mentors like this for the first time and then converting that into relationship and friendship.
See, it was very lucky. I mean, imagine if you were going to America and within 2 weeks you met Warren Buffett, Peter Lynch, Charlie Munger, Carl Steinhardt, all these great investors. They happen to be your neighbors down the street, in your school, in the coffee club. And you would think that everyone is such a good investor. So when I came in 89, the names you mentioned, Chandrakant Sampath, Rakesh, Jhunjhunwala, RK Damani, Durgesh Bhai, Nimesh Bhai, I just happened to meet them casually in the course of my business conduct. And they really helped shape my philosophy out there. I would say that I also had some basic instincts of what investing is. And I shared that philosophy with them. So it helped us come together and shape our views. But I think the thing that historians will recall is that the market had different sets of people at different times. In 92, you had a scam, which so-called the Harshit Mehta scam that broke out. And all those people were more opportunistic. The people who ultimately got caught and, had to go to jail and all. They thought they were supreme. The market wasn't supreme, that they could move up the prices of stocks, so on and so forth. And ultimately, it ended badly. The same thing happened in 2000 when Ketan Parekh and group, this so-called, ran into a lot of trouble by trying to push up TMT stocks. The group that I belong to, fortunately, believe that the stock market is important. We are not important out there. The businesses that we buy are important, and those businesses compound over long periods of time and create extraordinary amount of wealth for investors, which is what we've seen playing out. So I think we all are knitted together in that seamless web of trust, the seamless belief in the importance of market, and not believing that we are moving the prices, but believing that good results, good corporate governance, good businesses move prices.
So you are attributing this to luck. Let's say a 20-year-old is genuinely, you believe that you are some of 5 people that you surround yourself with, you need mentors to rise or do what to be successful. एक 20 साल का बच्चा जिसको ऐसे mentors बनाने हैं, वो क्या करे?
Well, part of it is luck, of course. You need to find, but you generally get the people you deserve in life. You generally will be able to meet the people you deserve in life. So it's a evolved concept. But I think you try and hang around with the people who, birds of a feather flock together. So you try and find similar people. Value investors, I always tell people and young people, is that you may make friends with a variety of people in life, but in terms of business, stick with people who understand and appreciate your philosophy. That doesn't mean that they agree with you in every stock pick you made. In fact, you'll be surprised at the names I mentioned in me. We pick completely different stocks in order to, make a mark on the stock market. Completely different stocks. But the philosophy was the same. The philosophy is the same. You want to buy cheap goods. You want to find good businesses. You want to find good corporate governance. So I think as you step out and look at the next 20, 30 years of your career, you want to do the same. You want to find, people of integrity, people with good corporate governance, people who share a philosophy that the market is important. I think, and if you make an effort to do that and avoid the shortcuts that sometimes will tempt you, I think you'll do all right. I think there's enough. In every generation, there are people who are very serious value investors, because if they were not, the business would be over. So there will be very serious value investors, and you need to reach out and figure out who they are and try and be friends with them.
How to be friends with them? So let's say you meet somebody for the first time. I'm trying to go deep in whatever we speak, right? You met someone for the first time. How do you convert that first time meeting into deep relationship and friendship? And help us narrate your first time meeting with these folks and what led, how do you stretch that meeting into relationship?
Well, I think what happens is that you need to offer something to them, not just take, but offer something to them. So a lot of the people that I befriended in my early years were very fluent to the domestic economy, were not fluent to the international economy. And I happened to come from overseas. So I was reading the Wall Street Journal. I was conversant with the Fortune 100 companies. I was conversant with the Dow Jones Industrial Average. In fact, I was one of the first few people who was conversant with people like Warren Buffett and Charlie Munger. They're just names that these people had heard. So when we would meet over a cup of coffee or over a drink, I would always talk to them about Buffett, Munger, Lynch, Mark Faber, Jim Rogers, people like that. So I helped contribute and grow their minds in these matters. There's someone called Warren Buffett sitting in Berkshire Hathway, and this is what he's doing. There is someone, building another Starbucks out in America. So all that contributed back. So I think you need to contribute somehow to people. And a lot of people want to give back. It's because they've realized, like I have been so lucky, we want to give back. So when you find your group of mentors, you'll find that the people who are truly successful want to give back. The thing I would caution you is don't abuse the time. Make sure that you're respectful of the time. And value investing is such a branch that, you need to run your ideas by other value investors so they can knock off things that are right or wrong. So, and you all start from ground zero every day. Is the stock value? Is the stock not value? And believe me, young people can sometimes add value just by the understanding of the markets. So, you can add value to the other people also. But because obviously they're senior to you and they've been more successful, there's the intimidation factor.
Yep.
But I think they'll look out for people who can cross-check their views or, have a different point of view. As long as I think you're respectful over the time and space, they will help you out.
If a 22-year-old walks to you and say he or she wants to get rich, what would you say to him?
A lot of 22 people walk into my office and say, I want to get it. The 2 points that I would say to them, first is that I am, balding and, closer to 70 than to any other age. And I would give up a lot of the money if I had, if I could retain my experience and, see the great Indian experiment unfold over the next 30 years or so. I'm pretty sure that we could make back our money because we already have the kind of wisdom that the last 30 years have brought. So don't be in a hurry. Enjoy the process more than the proceeds. That is important. But here's the trick that I have always found most fascinating. You could be 20, you could be 30, you could be, 32. It doesn't matter to me. And you could start with almost any amount of money that you want. 5 lakhs, 10 lakhs, 25 lakhs, whatever you can push up at that time. But if you start the discipline of investing over the next 30 years and you compound your money at a certain rate, you're going to be rich at the end of the 30-year period. And I'm using 30 years because that's the level of professional career we have. We start business at say 25, 30 and you retire by 55, 60. 4 or 5 years plus minus here, there, but 30 years is a career. And I noted some stats of how 30 years of money compounded, what it gets you. For example, 30 years if you compound at 16.5%, compounded, each year you compound at 16.5%, you'll make 100x. If you 30 years you compound at 25.9%, you'll make 1000x. At 30 years if you compound at 35%, you'll make 10,000x. So it's mathematically there. The Sensex itself rises at about 15-16% a year. Okay. So you don't need to do anything crazy to do that. Just buy good businesses and learn to sit on those good businesses and you'll probably do well. If you do a little bit better than the Sensex, you'll probably make a lot more money. So the magic trick is that there's no magic trick. You need to start early, need to invest in great businesses and need to delay gratification towards the end of your career rather than the beginning of your career.
How did you make your first million?
I think I first started true investing in, I came to the market, I started in 88, 89 and I was a broker at that time. And, we wanted to do brokerage business and the great bull market unfolded in India at that time, the ACC bull market. And I was, being a broker, not an investor. And suddenly I realized I'd rather be an investor rather than a broker. So I would say I would really start investing in 93. And I got lucky in the sense that, this is how life connects. I didn't think of it that way, but I was a programmer in my prior life. When I came back, Infosys went public in India and very few people understood the value of the franchise there because they're more intellectual assets and physical assets and we were more concerned with plant and factory and those kind of things. And that stock went on to become a great stock. So, and because I was buying Infosys, I happened to see another stock that got listed, a public sector stock called CMC. In the 1970s, when the government of India told IBM to get out of India, the government created another company to take over the computers and maintain them called CMC. And Manmohan Singh decided to list that company. And no one understood business and they're throwing that business away. So I happened to buy both these stocks because I understood technology, understood the value of those businesses. And both these stocks at due course of time became 100x. So they were my first two pillars of my financial wealth.
आपने अभी तक गुड बिजनेसेस बहुत बार बोला है. I'll double click on that. But उससे पहले help us understand जो आपने delayed gratification बोला. Would you rather prefer 100 crores or let's say you would prefer being a billionaire at the age of 70 or have 100 crores at the age of 25, 30?
It's a fascinating question and the one I've dealt with many years and many arguments for my younger. So would you rather have a small amount of money when you're younger or a larger amount of money when you're older? I got the latter. I mean, I got more money at older rather than younger. And younger, I was only obsessed about making money and trying to build wealth for myself. So there's lesser time to enjoy it, obviously, but there's enough time to give it back. So I don't know. I don't know what the right answer is. If you're only interested in a career in the stock market and you want to measure yourself by how you've done in the stock market, obviously you want as many zeros as possible, and that comes only in the latter stages of your life. But if you want a varied life, if you want to be an investor, you want to be an entrepreneur, you want to be a traveler, you want to be an educationist, perhaps getting money at a younger age would be more helpful. But what has worked for me is the compounding long-term effect. Though I'm not sure, if you ask me to choose again, I'm not sure what I've done.
And if आपके पास अभी जितनी भी knowledge है, अगर आज वो सारी knowledge के साथ you had the age factor at your end, अब 22 साल की होती है सारी knowledge के साथ, क्या करते हैं आप? अभी 2024 है, You're just graduating out of your college and you have all the knowledge. What would you do?
No, it would be fabulous because I think the next 30 years will be as exciting as the last 30 years were in India, perhaps even more exciting. I'll tell you, this is a common misconception that generations have. For example, when I came back in 89, 90, a lot of money had been made in the ECC bull market and I was just struggling at that time. And I remember thinking to myself, oh my God, I'm so unlucky. Came 3 years too late. These guys have already made all the money. Little realizing the next 30 years were the more exciting part in the Indian stock market. So I've asked many a veteran investor about what they feel about this. And I asked them, what is the best generation to have made money in India? Was it 90s when India liberalized first? Was it 2000, the TMT boom? Was it 2008 when we had the great Indian middle class coming out? What is the best generation or the best decade to have been invested? And almost universally they tell me the best decade is going to be the next decade. So the opportunities are so much greater over the next 10, 20, 30 years that, if I could get my health back and be young back by a magic genie, I'd be happy to do that. Happy to give a large part of my money just so that I can keep understanding what's happening. And probably the mistakes I made in the first 20, 30 years of a career, I won't repeat them. So I'm sure it'll be more easy to make back the money that I give up, say, to the magic genie at this time.
What were some mistakes that you would say कि यार ये मत करना, ये बहुत भारी mistake थी?
I think there are a lot of mistakes. I mean, this can take the whole podcast if you want the mistakes I made. But I think it boils down to doing a few more things strategically. I think we got the framework right. But the great ones, the truly great ones, know when to back up the truck and buy. Okay, when great opportunity knocks on the door, you can't be happy by buying 2% of equity or 5% portfolio. You need to back up the truck and buy. And every investor gets 2, 3, 4 great ideas in his lifetime because he's looking for them. He'll get those ideas. At that time, it's your almost call to arms. How do you do at that point? The great ones manage to buy a really meaningful part of it and hold on to it. But that requires a tremendous amount of self-confidence. So, I think I'm getting better over years, but am I the best possible of that? Probably not.
हर आदमी की लाइफ में 2-3 ऐसी अपॉर्चुनिटीज आती हैं.
At least.
लास्ट अपॉर्चुनिटी वो कौन सी थी आपकी लाइफ में?
I mean, for example, this is well known that, in fact, I've gone on television and publicly said it, that these defense companies, correct, the defense real companies were available at, I think I used the quote in a public sector that they're throwing these businesses away. They don't understand the value of these businesses. So you're getting companies that have gone up 20x. You're getting them at 5% of their notional value today. So, I mean, those are great opportunities. Did I do better? Yes, I did better. I bought lot truck. But did I buy 10% of those businesses as I could have perhaps at those times? I clearly didn't have the courage to do that. So, that's the difference between a truly great investor and a good investor. And I would say I was being a good investor, but not a truly great investor, because a truly great investor, and especially at this stage in my career, after I've seen 30-year cycle, probably would not have made the same mistake. But it's not easy. I mean, the point I'm trying to say is that it's not easy to back up the truck and buy. You have to understand, steel yourself and, have so much self-confidence in what you do. So, it's very easy to think that in retrospect, I'll buy all businesses. But when you're buying it, there's so much doubt and uncertainty about the value of what you're doing that it makes it more difficult to do.
What's the biggest thing that pulls you back? If you find something really good, what stops you going full on and, go bonkers and, load the truck up? What stops you? Fundamentally.
Self-doubt. You wonder are you the only smart person in the room? Are you, how much are you willing to lose if this thing goes wrong? Are you willing to get back? Your peers will make money, but your stock won't work. Are you willing to face that music? There'll be a lot of things, but I think it comes down to self-doubt. I think you're plagued by self-doubt, whether it's your best idea or not your best idea, and whether it will work or the market will reward it or not. And I think you need to conquer that over time. And, have I got better at conquering it? Yes. Have I conquered it? No.
And how do you, we all are young folks. How should we keep ourselves ready for that opportunity? How do you find that 1 or 2 opportunities that are going to come, let's say 4 times in our life?
You know it. I mean, it's just you can't sleep at night about it. It'll be so ridiculous that, for example, when we got this public sector stocks, right? For example, the more recent example out there, my son who joined me in the business, was more passionate about it than I was. And I was trying to actually deduce. I said, I've been there. These things haven't worked for 5 years, 7 years. They won't work. And of course, it's a fatal flaw in the stock market thing, because it hasn't worked, it won't work. You go by the facts and not by the opinions of other people. And while the opinion was uniformly negative about this stock, the facts were in my favor. That these stocks were cheap. They were at 5p, 5% yield, and with 5-year order flows. So there's nothing wrong in terms of the earning profile or in terms of the business outlook for these companies. The question was one of whether the market would reward these businesses or not. And it turned out, yes, they were rewarded in great spades because the corporate governance improved and there was a whole new visibility about these businesses that took place. But, it's a very lonely thing. You have to, no one, if it's truly value, no one will support you in that time. Everyone will say, thanks, but this is not for me, pass on. No fund will buy it, no institution will buy it. So it is your call against the world. When it works out, of course, as John Kennedy used to say, victory has 1,000 fathers, defeat is an orphan. So, when you're defeated, when the stocks are down, they will be unpopular by definition. And by definition, that's when you get the most value.
So you have to be contrarian and then you have to be right also.
Absolutely. You have to be contrarian, almost by definition. You cannot become a billionaire by buying HDFC Bank at 12 lakh crore market cap. I mean, you can compound your money perhaps, but you cannot become truly rich out there. You have to be rich by getting this 20, 30, 40 X's, in your portfolio. And by definition, those stocks will be extremely unrecognized, underloved, underappreciated. Okay. But you must be able to see something beyond those numbers and say, these are great businesses. Their market is throwing them away for some reason. And I'm willing to put a bet on those businesses. So, and that has happened to me many times in my career, whether with technology shares, with liquor shares, with public sector shares. I cannot truly complain. I've had more than my share of great opportunities, and I've been very blessed that way. More than my share of opportunities, 50 baggers, 100 baggers in a portfolio, so there's no complaining. What I do complain is about my own, I think maybe I'm a product of a middle class attitude that you want to keep what you have, not going to put it all out of the line. So you're not willing to go all out, as some of my peers have been able to do, because they don't suffer from the middle class phobia that I suffered, that I always want to be a part of the middle class.
Very interesting. You say you have to be a risk taker.
The most important thing in the stock market is, or in entrepreneurship, you have to put money on the table. Okay. You are convinced to put money. You can't put money when everything is lightened up and everyone knows everything. Then you can't make it. You have to put it when there's some uncertainty, when there's some doubt. People always say, oh, I'll buy after the election results come out, or I'll buy after the earnings come out, or I'll buy after this comes out. And all they may be true. But in order to be truly ahead of the market, you need to get something or some insight before the crowd gets into it, before the so-called smart money gets into that stock. So, it's a matter of what I've been taught is you put your money on the table. If you're convinced, no matter who else is not convinced, no matter the promoters are not convinced of the business, but if you are convinced, go ahead, put some money on the table, because ultimately the market will reward that conviction. And the real money comes only from conviction.
This is very fascinating, sir. How do you understand that this thing that you are, so for first example, first thing, HDFC Bank, everybody knows that this is a good thing. It's the highlight, it's the crown, it's the jewel, whatever. How do you identify things which are unpopular, which are not popular, which nobody is seeing them? Where do you find this? What's the approach of finding such things?
I think the thing that I use most often in terms of market cap, to give you another example, in 2002-03, for example, the Indian liquor business was available for 200 crores. So you could buy 10% of the liquor business for 20 crores. That was the price of a flat in South Bombay, and though even in those years, NCPA. You could buy 10% of the liquor business. Now you explain to me a country of 1.5 billion people with about 100 million people getting into the drinking age, more prosperity. How could that business be so cheap? And if you got 10% of the business, think of it the other way, which is the way Buffett has taught us thing. You're buying 1 in 10 bottles that are sold in this country. Anywhere in this great country of ours, any college student drinking a beer bottle, 10 bottles are drunk, 1 would be mine if I bought 10% of the company. You got it for 20 crores. It was that cheap, right? No one is willing to buy it at that point. So sometimes you do just valuation, just basic valuations of different businesses, and see if they make sense to you or they don't make sense to you. You'll come up with a surprising answer. I mean, I'm an independent analyst. I don't have staff also of MBAs trying to track my company. It's me and my son sitting on the background figuring things out. So it's not that complicated. You just figure out the valuations of business. I mean, when you bought the PSU, to come back to the example, we bought a company called Mazagon Docks, for example. Mazagon Docks, I think, came out with an IPO of, I think, maybe 4,000 crores. They had 1,000 crores cash sitting on the books, 1,000 crores of land that they had bought, 1,000 crores of inventory that bought, and they had a 10-year, 6-year order flow that we knew that was peaking, and the earnings at some point will be 500,000 crores. So it was that cheap. But you'll be astonished that market keeps throwing you these kind of opportunities. Every bull market will throw up new kinds of opportunities. It's your investors, your job as an investor, as an analyst, to look for these opportunities. And almost certainly you'll find them if you keep looking. If you're looking to play the momentum game, you're not going to find them. But if you're looking to play the long game, the value game, you'll almost certainly find them.
Sorry if this is very childish, but how do you find? So मैज़डॉक के बारे में सबसे पहले आपको कैसे पता चला? मैं एक बच्चा हूँ, तो मैं क्या टिकट टेप या स्क्रीनर जो भी है उस पे बैठ के एक कंपनी को खोल के चेक करूँ और फिर उसको कैसे? मैज़डॉक के बारे में पहली बार आपने किससे सुना था?
Yeah, it's interesting. We bought a company before Mazagon Dock called GRSE, and some young analyst, like I said, he created Webber's Trust. Some young kid whom I mentor came to my office and told me that he likes GRSE. And of course, the name itself is funny, Garden Reach. So he thought it was some other maker. He said, no, it's a defense ship maker. I said, oh, okay, what? He said, sir, it's available for about 1,000 crores. He had figured out the matrix. It's available for 1,000 crores. But they have a 25,000 crore order book. I found that hard to believe because I was not following the company at that time. I said, it doesn't make sense to me that the company would be trying to. So he bought me the relevant documents to prove to me the point. Then they had an analyst meet. So we went and they said, yes, we have a 20% order crore book. It's going to be done in 5 years' time. And year 1, 2, 3 will be peak earnings. And then 4, 5 will happen like that. And at peak earnings, they go to earn 500 crores. And it just blew my mind. They were getting a company for 1,000 crores with peak earnings of 500 crores, maybe 3 years down the road, 4 years down the road. And people were not willing to bet on those businesses. Despite, and remember, the government of India already instituted rules that 1/3 of that profit will be paid back as dividends. So I was getting a dividend yield to boot of 5%, 6% on these companies. When in fixed deposit, you're getting 5%. I was getting dividend yield. So that led me to GRSE. Then I said, let me look at the other ones. And then we looked at Mazagon, that was also coming. Looked at Cochin Shipyard, that was also coming. Realized they're monopolistic businesses with a moat. If you want to build an aircraft carrier in India, and if India wants to project power, they'll have to build an aircraft carrier. There's only one company that can build it. That is Cochin Shipyard. Mazagon Docks, if you want to build destroyers, you want to build nuclear submarines, only one company can do it in India. There's no other company in India can do it. That's Mazagon Dock. Of course, I just want to clarify that I'm not recommending any of these stocks to you.
Yep.
This is just a part of educational process. I own this, I buy this, I sell this. I'm making myself absolutely clear.
Yes.
I'm not in recommendation. This is purely for educational purposes.
First thing that you saw, this is the only company which has the capability to do this in India. This is the first thing that you got to know. What's the second thing? You saw the order book?
The first thing I found was the market cap.
Which was around?
GRSE was 1,000 crores, Cochin was 2,000 crores, Mazagon was 4,000 crores. So I was getting the entire defense shipbuilding industry for, $1 billion in India. It didn't make any sense. India is the largest arms importer in the world. Indian budget is maybe 6-8% of our budget is defense. And yet you're getting this for $1 billion. They're throwing it away. The reason they're throwing it away is because they were called public sector units. If this was renamed Larsen Shipyards or XYZ Shipyard, they would have got a fancy multiple in the market, So that's the mistake the market make, and that was the opportunity that we had in order to smell the money. So the first thing you obviously do is you just look at the market cap of a business and see if that if I could, would I buy the entire business here? I'd buy the entire business. The thing with the PSU, they have a long track record of market not understanding the valuations of the business. I told you earlier about a company called CMC, the public sector stock. The company listed a market cap of 30 crores in the Bombay Stock Exchange. For 30 crores, they've done the entire Indian railway ticketing system. Anytime you go and punch a railway ticket anywhere, from Ranchi to Patiala to Bombay to Calcutta, wherever, it comes through CMC's work. This is a brilliant network built in there. The Bombay Stock Exchange trading system, the entire trading system was built by the CMC. And yet this company is worth a few hundred crores. People don't understand the value of those businesses because they were public sector. If the same IBM had built this country, they'd probably paid 500 crores for it. But here you're getting it for 20 crores, you don't want to buy it. So, you have to look for unloved, underknown, underowned, underappreciated stocks like liquor stocks, technology stocks, PFC stocks, and you'll be able to find the values. Typically, the older you get, you want to put it in more stable businesses, perhaps.
Mm-hmm.
But when you're young, you want to take that risk out because you could be wrong, right, and you'll be okay. You don't want to be right, wrong, because then you lose all your money.
लिकर बिजनेस था, उसके बारे में पहली बार आपको कैसे पता चला? हाउ डिड यू आइडेंटिफाई? किसी ने दोस्त ने बताया था या आपने स्क्रीनर पे देखा था? कैसे देखा? फर्स्ट बार कैसे पता? पहली बार?
Someone I think must have mentioned it to me, but then I did it's again, for me, it's always a valuation methodology. What is the market cap? What is the market cap? Number of outstanding shares times current price. That gives you the market cap of the share plus debt. These companies didn't have significant debt even at that point. The market cap was 200 crores. You could get 50% of India's liquor market and 50% of India's beer market through the two companies that they own for, a few hundred, maybe $120 million. Then you do the comparative valuations. What is, for example, the value of, Thai beer or the value of San Miguel beer in Philippines or the value of, Harbin, there's a company in Harbin in China whose beer, they're running in billions of dollars. And here these businesses with 50% market share, great brand names, wide availability, and no restrictions basically. Well, we were so cheap and we knew things would change for the better. We kind of figured that out. That was the part we added that, it's going to, the liquor policy will become more enlightened because it's such an important revenue source for the government. And the promoter of the company at that time will ultimately see the value of the franchise. I mean, let's say the promoter of the company was taking out milking money from the company, which is what the big rap against them was, that he takes so much. And he was. The probably is, my sense is he was. But at the end of the day, you're robbing Peter to pay Paul by taking money out of these businesses. You're not getting a market cap. But once he stopped doing that, the market cap mushroomed with these companies, once they realized that. So he realized that, and we realized this would happen. A man with such a big ego and such a flamboyant personality could not tolerate his companies being also rans in the business, that he would also want a market cap. So, and we were buying things so cheap, and there was a dividend of 2%. So while we waited for that to happen, we were getting a dividend yield.
So first thing, that the market cap should be an appreciable fraction of the industry size. If that's the filter.
Not really.
Because this is the framework that I'm getting, sir.
The market cap itself speaks something to you. For example, HDFC Bank, to give the free example, is at 15 lakh crores. But it started a journey in life as I think 400 crore market cap company at that time. So the absolute value of that market cap makes sense. If you had figured out in 92, 93, as my friend had figured out, that at 400 crores, it's a no-brainer, HDFC Bank. Okay? It's a different proposition at 14 lakh crore market cap or 20 lakh crore market cap. So you first use that filter of a market cap. That gives you an absolute value figure. Ask yourself, are you able to buy this whole business if it was available at the market cap being offered? And if the answer is yes, then you can see why is it being so cheap? What is the reason it's so cheap? Underowned, underappreciated, unknown, unloved, whatever. And thirdly, is there a trigger for change that you can foresee? For example, in the PSU stocks, we saw corporate governance improving. In the liquor stocks, we saw that Mali's ego would not prompt him to have such a market cap. Sometimes in the technology company, they were underowned, underappreciated. No one understood the value of these businesses.
Why that happens? Sorry.
Yeah, I understand, because people, focus on the past and what they have been successful with. So Infosys, you might find it hard to believe, when it came public in 93, came out at 30 crore market cap. 30 crore market cap was the market cap Infosys. Today it's some 10, 12 lakh crores out there. So it is underowned, underappreciated, underloved at that time. But you as an analyst have some insight. You believe that this is the value doesn't make any sense to me. Why does it make sense? Because people don't understand this business. With Infosys, the common complaint at that time was there's no factory and assets. everything leaves for the door. So why am I paying for it? People could leave. But it's the wrong way to look at it. They had some intellectual property, they had some culture, which obviously came to the fore in many years' time. So always in great stocks, you go back and study the pharma industry of India, you go back and study all the industries that created so many 100-baggers, whether it was in the 70s and 80s, the FMG stocks like Hindustan Lever and Colgate and Nestle, they were all at some point unknown, unknown quantities. And by the time they became known, they became extremely richly valued. So as an analyst, you want to get in ahead of the game. Great business, but discounted or being sold at a cheaper price for some unknown reason.
And so, आपने बहुत बार ऐसा भी बोला है कि big money, bull markets is equals to big money. हमको कैसे पता चलेगा कि जो मार्केट है वो अभी बिग है, बुल मार्केट है या बेयरिश मार्केट है? हाउ डू यू नो?
मालूम पड़ता है. I think the one thing that helped me, there was an author called Joe Granville who wrote Cycles of Bull Market and Bear Market, and he kind of divided each bull market in 3 phases and bear market in 3 phases. But typically what you'll find in the end of a bear market is that the best example I can give you was in 1970s. There had previously a very ferocious bull market in America. And then values started falling with inflation, Vietnam War, and oil prices out there. So at the peak of the bearish sentiment, the cost of a taxi medallion to run a taxi in New York City was greater than the seat on the New York Stock Exchange. It had become so unpopular being in stocks. Business Week, one of the most popular magazines, had come up with a cover story calling the death of equities. These are all signs when people refuse to, they have to do anything with stocks. People complain how much money they lost in stocks. We don't look at charts. That's a good sign that value is there and value are ready to take off over time. So I think conversely, at the top of a bull market, you will find everyone talking about how much money they made in the top of a bull market. There'll be a lot of leverage trade going on, a lot of interest in F&O, a lot of interest, the famous saying, the panwala will tell you what tips to buy. These are all symbols of, market peaking out. You want to load up. You want to actually load up in a bear market, because when values are there, that's when you want to buy it. And then wait. There's one thing that is very pronounced about markets, that every bull market will end, will be followed by a bear market, will be followed by a bull market. So just like we have, the seasons, monsoon comes every year, you miss it this year, get back next year, nothing to worry about. The same thing is the cycle of the market. If it didn't exist, the market game would be over. So it has to happen. It will go from one extreme to the other extreme, from unlove to popularity, from fear to greed. So you need to understand when a bull market is ending, you need to lighten up on equities, take some money home, encash some of your gains out there. And then when the bear market is going through 1 phase, 2 phase, 3 phases, you need to load up on equities. And one more clue is in a bull market is ending, you'll find that good news will come out. GDP has grown by 8%, or some good news, corporate profits at record highs, and the market will not respond. The market will tend to go down on that news. So the market is telling you that it is getting tired, that all the good news is now factored into the market. And the reverse will happen in a bear market. That bad news will come and the stocks won't go down. And that's a good clue that the market is in the process of bottoming out. So these are good clues to keep in mind, how the market reacts to news. If it reacts favorable news, the bull market is intact. If the market stops reacting to good news, that means the market is showing signs of weakness. And if the market bad news comes, industrial production down, corporate profits down, uncertainty on the election front, it's a good sign that the market is bottoming out.
And can you predict the switch of the cusp? कि जब वो bull market जब नीचे fall करे, can you predict this?
We try. It's not easy, but we try. We spend a lot of time in gray matter trying to figure it out. We get it sometimes right.
And as an investor, you should wait for bear market when valuations are,
very hard to do, because clearly that's the most opportune time to invest, but the confidence is also the lowest. The cash is the lowest at that point. So typically as the market improves, price signaling gives us confidence. You do more and more investing at that time. But you need to be well positioned once the bear market is ending, because you have to believe that this bear market will end and a new bull market will start, and you want to profit from that. Will you be fully invested that time? Only the best will.
And what do you mean by being well positioned at that time?
Well invested in new stocks. Like every bull market will have new leadership. So you don't want to buy, any old stocks. You want to buy, you think, stocks that will leave this new bull market higher. For example, this bull market is led by public sector stocks. Before that was, say, the technology stocks. Before that was the cement stocks. So every bull market, new horses for new courses, we say. So every bull market is a new course. Every bull market presents new leadership in the market. Big underloved sector that is unknown suddenly becomes famous. You remember before 2000, no one talked about technology stocks in India. I mean,
I was not born, but yeah.
Yeah, you're not born. That's hard for me to believe. As someone so young. But anyway, this just hit us like a gale force wind at that time when technology took off out there. Because you look at the composition of the index. You look at the composition of the Sensex or the Dow. I think over 20 years, there's a lot of churn. The old goes out, the new comes in. That's because, the old businesses like the textile business, the shipping businesses, the chemical businesses that were so important 20, 30, 40 years ago are no longer that important.
जब आपने new course और new horse की बात करी sir, we know that you are very famous for gifting shares, right? How do you plan? First, let's say the problem statement is you're buying stocks for your grandchildren. Okay. For your grandchildren.
Right.
Up now, how do you know that things that you're betting on right now will stay young, will be fresh, will give you that, compounding and everything 10 years down the line or 15 years down the line?
It's hard. I mean, that is basically what the market pays us for. We've kind of think it through that 10 years from now, this will be a far more valuable company than it is today. So, that is what your USP or what you bring to the table as an analyst is. If you can't do that, I figure you're not the best person in your job. So, it's not, growth covers a multitude of sins is a saying, and you buy a stock cheap enough, okay, and growth comes, everything will be taken care of, So the first thing to do is to buy the stock cheap. When you gift to somebody or you buy for yourself or you build a portfolio, you want to make sure that it's high quality businesses that are cheap for whatever reason. Okay. Now you could be taking another tack. You could say, I'm interested in 6-7% growth. That's all I'm interested in. Then you can buy the blue chips. That's fine. But if you want to bet for a young man, someone who's 5 and 10 and 12 years old, then clearly you want to bet on more unknown quantities, because that, if it works it right, he's going to change his trajectory of his life. If it doesn't work out right, he'll lose a little bit of money, or maybe not even lose money.
So, help me understand. Please have some water. Help me understand. How do you see future in 10, 20 years? What are certain things that will happen? 20 साल बाद दुनिया कैसी होगी? Do you have some sneak peek into that?
No, but I think you want to look for entrepreneurs who understand that and see great opportunity ahead and unlimited market space. For example, some of the stocks I bought from my grandchildren are property stocks, because I feel there will always be need for housing in this country. The country is not going to change, the world is not going to change, they won't need housing. Now, it could be that they won't need electric combustion cars. They'll need electric cars. It's quite possible they would need that or that. But still, you need tire manufacturers, you need glass manufacturers, you need all the basic businesses that are out there. In pharmaceuticals, people are going to get sick. You might be different mode of delivery. You might be biologics, might be generics. I'm not sure about that. But there will be need for medicine. So I think you make those kind of bets. I think you buy some businesses are evergreen businesses. They will keep compounding over time. And generally they are sin businesses, cigarette smoking, liquor business, whatever. Some businesses are cyclical that you figure out. And some businesses you feel, given the country and the opportunity, are more secular. That you feel growth 5, 10 years and the business is not going to go away. I would wager to you business of housing won't go away. It will remain a vibrant part of our culture. And there's other similar businesses that will, basic FMCG businesses will probably stay in India. Only the trouble with that is they're well valued. So they're not getting anything, they're not throwing away any of those businesses. You want to find that combination.
Interesting. Do you think just sin business hota hai? That will continue to, because that's inherently associated with the humanity and the vices of humanity.
Precisely. You go back and study stock market history. What has been the best stock in America for the last 100 years? Been a company called Philip Morris. What did they do? They make cigarette manufacture. What is the best company in UK? BAT. What is the best company in Japan? Probably Japan Tobacco. Liquor companies. You know, for a while, briefly, there was a liquor company in America, in China, that became the most valuable company in the world. Okay? They made what a liquor called Mau Tai liquor. Now, you won't remember it because you were after father. But in 72, when President Nixon and US went to China, they stored each other with Mau Tai liquor. It is such a rare and great brand in America, in China, that it became hugely popular over a period of time. So, I mean, these businesses, because they a basic human need to, if you didn't have a bar in outer space, you probably invent a bar, because the bar is where people, relax, unwind after a hard day's work. You need a little bit of lubricant in order to loosen up, relax after a hard day. You need a smoke. I'm not, condoning people to smoke, but it's not a good habit. But I mean, that's just the way life is. That is a fact of life. So those businesses, despite the taxes, despite what government tries to do, have almost inelastic demand. So people will overbuy it, and these companies enjoy great profits because you limit new people coming into the business. The old ones actually enjoy greater profit margin and greater market share. So these are good businesses to hold.
So correct me if I'm wrong. You think कि फ्यूचर में क्या होने वाला है? जैसे आपने बोला कि हाउसिंग, प्रॉपर्टी सबको चाहिए होगी. लोगों के पास पैसा होगा तो दे विल बाय होम. This is basic assumption that we are making. The second thing is, people are continue to grow old, and hence there will be some diseases, and there will be some drug company, genetic company, which will get more business out of this. Second thing, as AI come, people will find more creative things. People would need to rewind, so they will need to buy some sin businesses. So is this the fundamental framework to think about future?
It's one way. I mean, it's not easy. You can buy some of the cyclical business at a very cheap valuation and make money out there.
Give me example.
For example, right now, all the oil businesses were a few years ago completely trashed. No one wanted to buy them. I think the oil component in the Dow 30 had gone to the lowest level yet out there. But combustion or oil is not going to go away. It's going to be part of life for 20, 30 years. So they're now enjoying a significant rebound. So there'll be lots of stocks that are cyclically beaten down, that you can buy the stocks as long as you understand them. India's technology will continue to do well. There's a fear that AI will come and take place of the coders out there. But let's see, the evidence is not yet very crystal clear that we won't need coding or they can do anything other than simple coding that's required. The whole world runs on software. Everything is run on software. So India has a huge strength in software. So I would not dismiss that out of hand. So I think trying to predict what the future is inherently unstable. But I'm pretty sure that we're going to enjoy a cup of tea, sit in the house, pop some medicines to feel better. And these are good businesses to remain invested in.
Interesting. So, because आपने good businesses की बात बोली, you were, chairman of DMart. What are certain business model innovations? What are certain traits of DMart which you find really good? So, if अगर मैं एक business बना रहा हूँ, so what are certain learnings that I need to take from the DMart model?
Yeah, I'll speak carefully because I have, first just to set the record straight, I'm the ex-chairman of DMart.
Okay.
And if I was the chairman, I wouldn't even discuss that because I'm not allowed to do that. But now I'm the ex-chairman, I could be a bit more free of that. See, I think first the corporate governance that this business brought in out there. What do they do? I mean, they run at a gross margin of 15%, that business, okay? Net margin of 5%. That is better than all the CPS in the world. You could take Walmart, Costco, those levels. So they're a very, very tight ship. So they're low cost, they pass on the consumer, and the consumer finds low cost, he comes back to DMart. So it establishes a rich cycle. But even within the grocery business, life is changing. You have the Instamarts of the world, the quick commerce people out there. So the world is changing. It's not that these remain stable. But India is such a disorganized market for groceries that is going to get organized over long periods of time. And one of the players who will benefit from it is, of course, going to be someone like DMart. So you have a company with good corporate governance, unlimited road ahead, probably do well.
Give us examples of timeless business. So, for example, जैसे हम बोलते हैं कि EV, so the natural progression from IC internal combustion will be to EV. And let's say कि I'm betting on EV. do you also have fear that there will be some new technology like hydrogen fuel will come and which will disrupt the EV space? ऐसा भी, do you feel
Yeah,
something
of
like
course
that?
it will, but you will still need tires, no matter what kind of transportation we have. If you want personal transportation, of course, if you have railway transportation, it'll be maglev technologies or, whatever technology you have. But if you have personal transportation, you probably need tires. You'll still need glass for windows. You'll still need, bumpers, so these things. But a lot of the software value will not go into these businesses, will go to the software business, So who is doing the software for the autonomous cars? That will be the truly value addition. For example, when Tesla does an upgrade change, they just send software out to the millions of cars and it's done in the next 20 minutes. They don't need to come to the factory, don't need to come to the showroom, don't need to come to the dealer. So extraordinary changes are happening.
And tell me, everyone is talking about India's story, sir. Everyone, this is the next decade of India. Do you have any contrarian bet around this thing?
See, there are two thoughts about it. Do I believe that? Yes, I believe that. Does it mean that if India's GDP doubles in the next 5 years, the market will double? I'm not sure about that. Market has no such
Correlation.
China's GDP has gone up 24, the stock market is at 20-year lows. Japan hasn't seen a bull market since 1989. Thailand hasn't seen a bull market since the 1990s. So there's no such relationship that GDP leads to higher stock market. Higher stock market based on various things out there. So while I think India will do well and we are at the right place at the right time, the next generation of Indians, the next 30 years will live far better than we have lived and far better than our parents have lived. I'm not sure that there's a one-to-one correspondence between that and the higher stock market. That is a myth that people have. That GDP double होने वाला है तो हमारा stock market double हो जाएगा, triple हो जाएगा. There's no such, the historical evidence doesn't point to that.
बट अभी आपने बात बोली थी कि अगर हिस्ट्री में ऐसा नहीं हुआ है तो जरूरी है कि फ्यूचर में ऐसा नहीं होगा?
No, हो सकता है, नहीं भी हो सकता है. Great business will still perform. Would I still remain invested? Yes, I'll remain invested. Until and unless I find the valuations go out of whack completely. For me, it always comes down to valuation. That do I understand the valuation? Now, market can remain overvalued for a long period of time, can remain undervalued for a long period of time. That's okay. But I hope, and I hope to pass on that everything is good at a price. You can't buy anything at any price and expect to make money. It's a fallacy of thinking. अपने को अपनी माँ समझाती थी कि रुपये चीज 10 पैसे में खरीदने हैं. We want to buy things cheap. And I keep coming back to that same principle time and time again. And it's a principle that's etched into my life because of Warren Buffett or value investing, whatever, that you want to buy things cheap. And that principle will never change in the stock market. Because if it changed, it isn't a principle. So buying things cheap, buying with the margin of safety, buying a thing you understand, that principle will never change. And that's why I feel that is more important than any other story that India's GDP will go 10 times, whatever. They could be priced as such. For example, to give you an example which everyone quotes, I don't think you could have bought Infosys for 10 years and then not make any money because it was already priced into the market. You could have bought Lever, the best FE company in India, and not make any money because it was priced into the market.
जैसे आपने मार्केट कैप आपने को समझाया था सर, वैसे क्या आप वैल्यूएशन भी एक बार समझा सकते हो? When do you know that something is overvalued and when do you know something is undervalued?
I think, again, I am not doing DCF analysis that my contemporaries do sometimes sitting in institutional houses. I am not privy to, what the management is doing, capital expenditure, whatever. I'm looking at a basic business and say, does it make sense to me? Okay. And that comes from market cap. Okay. The second filter I'm using is that, is there any triggers for change? Is management, are we seeing the prices of commodity go up? Are we seeing the price of a business go up? Are we seeing some more productivity of capital going out there? And if we see that, we want to bet on that, on those kind of businesses. So I would say, you're saying, help my students understand. When you walk around, say you walk into the Taj Mahal hotel in Bombay and order a cup of tea, or you walk into, say, a Tread to do some shopping, or you walk into an HDFC bank, deposit a check, or want to any myriad of businesses, the first question that you should ask yourself is, what is the value of this business? How is the market valuing it? Now, say HDFC is at 15 lakh crore. Take a pass. You're not going to understand that business. It's too big. It's too complicated. But the businesses that are at 5,000 crores, 10,000 crores, that you can understand as an ordinary guy. Oh, how can it be 5,000 crores? There's a 5,000 crore building sitting here, or there's 5,000 crore in brand, or there's 5,000 crore. So get into the habit instead of just using the service or product of companies, understand the valuation that the market is putting on that business. For example, to lead you on further, I think the next 20, 30 years will be very big for digital India. We've already become the leader in the world in digital India in terms of UPI payments, in terms of Digi Yatra, in terms of so many things. India is amazingly enough still a lead of the rest of the world in terms of the sheer number of transactions we do. And everything is now becoming digital in India because you're almost cutting through a generation of infrastructure and telephone problems by going digital out there. So who are the companies that benefit from digital India? Okay, maybe that's the play for 5-10 years. There are maybe half a dozen companies today that will benefit from the digital India theme, that are playing to it, making programming for it, or making software for it, or making application for it. So if you're a young person, and these are not well recognized and well valued businesses, so maybe you should start looking at that. Now, will you get comfort from an earnings basis? Probably not. But get the comfort, the opportunity. If you believe, as I believe, that everything will be digital, that we're going to have a seamless digital experience, our college degrees, our rate deposit, our insurance, everything will be in a DigiLocker. Our trading is digital, our phone is digital. There's enormous scope for work in digital. So that's an emerging theme I would think you can look at.
Let's go one more layer deeper into this. Let's say everything is going digital. What are certain things where the business demand will grow? Again, number one, companies who are building software for the digital India.
Software,
applications. What else? Software से भी नीचे. अगर लोग ज़्यादा software बनाएंगे, तो कौन से businesses को
The other part of that is data centers. Obviously, these are all held in the cloud. So data centers would be hugely profitable businesses out there. Again, it's not a business that you can easily take advantage of. From data centers, you move to electricity. From electricity, you move to water. So there are lots of things that are benefits from it. But it starts the simple hypothesis that I want to find ways to play digital India. All right. Now you can say, how do I play digital? Do I play through software, through the application? Do I play through Zomato services that they do? Do I play it through a data center? And where the opportunity is available. The fact was that Zomato sometimes was available $50. Today it's $250. So you had a great opportunity in there. Similarly, in the application business, there are a lot of companies that were trading at lower multiples and lower valuation that have started to rise. But can they rise more? You can figure that out by market cap. If, for example, you find that a digital public infrastructure company that you like is available at a 5,000 crore market cap, you can say, yeah, give me 50,000 crores also, given all that's going to happen. So I want to play it that way. So I think you play the entire ecosystem of digital India. Try and find out all the companies that will benefit from it. Could it be e-commerce company? Possibly. Could be an application company? Possibly. Could be a data structure company? Possibly. Could be a technology company who makes technology? Possible. Then you figure out which ones you want to bet on.
We have 2-3 more questions before we go to the rapid fire round, sir. ये सारी जो opportunities आपने बताई, sir, do you only get these opportunities in public markets, which is the universe of 5,000, 6,000 companies? Or do you also get these opportunities outside the public markets?
No, entrepreneurs can get these opportunities. I mean, some entrepreneurs, for example, could see, quick commerce or delivery is an opportunity and nothing to do with public markets. Got venture capital, he did it. And that's great. You must do that. But for those of us who are not entrepreneurs, who don't have the hustle or don't have the drive, 18 hours a day work, but we want to bet for the stock markets for those kind of people. So yes, the opportunities are there. Not necessarily in the public market. But if you decide you want a career in the stock market, that is what you should be thinking of.
When you give this distinction, one thing, so help me understand, do good investors make good entrepreneurs? And do good entrepreneurs make good investors?
I think there's a symbiotic relationship between the two. If you're a businessman, you understand the value of, equity and vice versa. So it helps to have a business background, understand business, you understand how difficult it is to get approvals, licensing, and what the value of the market cap is. So I think it's a very symbiotic relationship. It helps back and forth.
So tell me, what's with the photo? Because a lot of people will, I think this is a Tao, if I'm not wrong.
It's Mao Zedong. Well, I think it just so happened I was in China and I liked the painting and I bought the painting. There's no other ulterior motive behind it. A lot of people think I'm a fan of Mao, which I'm not. But, it was a good painting and I got it cheap, so I bought it, Mao Tse-tung was, of course, the founder of the Chinese Communist Party, for what it was worth. And after he died, the great reform in China started as Deng Xiaoping. So, but Mao did open up the door to Deng Xiaoping. The stories as follows is that after Mao passed away, people were wondering who his successor would be. And it was Deng Xiaoping and his wife were the two premier runners. And finally, Deng Xiaoping won the race by pointing a letter that Mao had written saying, Deng, with you in charge, I'm at ease. And that finally convinced the Politburo that Deng Xiaoping, the man who reformed China, was the ultimate heir to Mao and not his wife, as was very prominent at that time. But, this is not a tribute to anything. It's a nice painting, that's all.
What? See, one thing, जब हम इतने सारे लोगों से मिल रहे हैं ना, तो एक common thing जो मुझे लगी है that all successful reputed people have some eye about the art. जो शायद मेरे में नहीं है, जो मुझे सीखने आया, I want to cultivate. No, what do you love about them? What do you like in this painting?
Just the way it's done. I mean, it's the use of color. I really like the use of color. The surprising thing I found more than anything else is that out of maybe 100 people that walked into this office, maybe 3 people have understood who this was. No one knows who this is, which surprised me because he's such a iconic leader of the 20th century.
People don't know.
No one seems to know him, so that's surprising. But I just like that. I mean, something just appeals to your eye. What is it? Who knows? But I like this paint.
It's like an unpopularized stock, undervalued.
Probably. I got it really cheap, so that was my value investor, I guess.
How was it you got it for?
I don't remember now, but it wasn't very expensive.
Got it.
Under $100 maybe.
So tell me certain things that you're teaching your kid and tell me certain things that you're teaching your grandchildren.
Well, my grandchildren are too young to be taught.
Okay.
They learn by lessons. So here's an interesting story of my grandchild. He was traveling overseas with his parents and he was missing his dadu. So he said, I want to talk to dadu. So they put him on Facebook so they could talk to me. So he's all of 7 years old, precocious 7-year-old kid. So he said, Dadu, what are you doing? And I said, I'm working with her. It was like 4 o'clock in India time. And he says, you never work. I said, what do you mean? He says, when I come to the office, you're always reading a newspaper. So that is my impression of my grandchild about me, that I read too much of the newspaper, not understanding that is my business to do. So I said, who works in the family thing? He says, my pop works. I said, what do you mean? He says, whenever I work, when I come to the office, he's always on the computer. So he is working, So that is the story of my grandchild. It's too young. But just to add to that point, in my son's office, there's a bust of Charlie Munger, who has been very influential in his thought process in the stock market for 3 generations of the money. Myself, my son, and now my grandson. Because my grandson, though 7-year-old, recognizes who Charlie Dadu is. And whenever he comes to the office, he will do a pranam or, bow down to Charlie Munger. So we are starting him early.
You met Charlie Munger?
I met Charlie Munger a couple of times when I went to Omaha for the AGM.
Somebody recommended me the Poor Charlie's Almanac.
Great book, yes.
I'm about to read that, but help me understand, जो आपके limited interactions थे, were there any learnings associated with those interactions, Charlie Munger?
Not one-on-one, because, you met him for a few minutes, he signed an autograph or something like that, and then you sat through the AGM and you answered all these questions. But here's someone at your age, what I would suggest is it's all on videotape. Berkshire Hathway's AGM going back 20 years, listen to that. It's fabulous stuff, The answers are distilled wisdom of 100 years of thought. So I would listen to all of them. Read the Berkshire Hathway annual letters. These are great places to start in. Anything you read on Warren Buffett and Charlie Munger will help you become a better investor. Now, there's not a one-to-one correspondence, but over time, you'll become smarter, wiser, and definitely richer by listening to them.
आपने बताया कि आपके grandchildren बहुत छोटे हैं, so you can teach them. But एक छोटा सा game खेलते हैं. Let's imagine आपके grandchildren is watching this after 20 years. What are some 2 or 3 things that you really, really want your grandchildren to learn?
That's a good question, but it's a good answer. the one thing I would like to teach them is the power of independent thinking. To be able to think for yourself is very important in the stock market, not to follow the herd, to do your own work out there. And second is the power of compounding. I mean, to me, that is the basic, it's amazed that a family can go from, just by understanding markets, in one generation, from poor to wealthy by the process of compounding. Compounding is what creates wealth in the stock market. So you need to buy good business, even if it goes at 16, 18%, you're actually going to do quite fine out there. So it's something we actually teach him very early. When my grandchild was 2 or 3 years old, instead of teaching him A for apple and B for ball and C for cat, we taught him ABC with a number of companies, B for Berkshire and C for, whatever the name of the company that time was, I forget, CSC or whatever, D for, DMart.
DMart.
So we taught him the names of the company. That's why he learned the alphabet.
This is interesting. What are some other ways to teach young people compounding? Any real ways? जिससे दिमाग blew up हो जाए.
I think it comes after a certain age. I think you try to do it too early, they won't quite understand it out there. But I think by the time you're 20, 21, your kind of mind opens up to this idea and you just tell them how small amounts can make a big difference. So I think it's better taught maybe just out of college or maybe when you're in college, depending on where you're receptive to it. But to teach him to respect value, to buy cheap, I think that starts much earlier.
We're going to the rapid fire round, but उससे पहले क्योंकि आपने कंपाउंडिंग के बारे में बोला, आपने बहुत बार ऐसे बोला है कि राकेश सर 5,000 रुपीज लेके आए थे जो आपके दोस्त थे और वो $5 billion. So if you see, that's 40% year-on-year compounding in dollar terms.
In dollar terms, that's how remarkable it is.
एक पागल बच्चा आपके पास आके बोलता है that he or she may not want to break this record, but want to be as close to 40% year-on-year compounding. What would you say? I know you'll find repeating yourself, but
I'd probably say it can't be done. I think his record is one that will stand the test of time. It's like Don Bradman's record in test cricket, 19.9%, 99.9 batting average. Warren Buffett, who is universally acknowledged the best investor, has a 21% compounded rate of return. So I think he's underappreciated by the fact that he was in India and not necessarily in the global financial centers when he did this. But his track record is the envy. And I don't think, let's be realistic in life. If you can compound even at 17, 80%, you're doing a fabulous job. If you want to compound 40%, lots of luck to you. I hope you get there, but I don't think you will.
What worked for him? What actually led him to achieve 40% compounding?
It's very difficult to say what makes a girl beautiful. Is it eyes? Is it a hair? You don't know what exactly is the calling of beauty. So it's difficult. But he was a risk taker. He was 24/7 focused on the markets. He did nothing else in the market. No vacations, no holiday time, no children, just focus on the market. And I must say this because as much as I admire him, he did pay a price for it. He paid a price for it in his health. So ultimately he made a lot of money, but he could never really enjoy the money. So I hope that people will lead a more balanced life because that is important too. As much as I admire him, I feel very bad that he was robbed of not spending time and seeing his children grow up, which is probably one of the greatest joys of life.
Which newspaper do you read, sir?
I read a variety of newspapers. So I read all the morning dailies that come, all the pink papers that come. But the two papers that I would recommend that you should read is one of them, either the Wall Street Journal or the Financial Times London. Those two are good benchmark papers that should be read by every business student every day. I'll tell you an interesting story that when I came back to India, I was already in America and I was addicted to reading the Wall Street Journal. So finally I managed to get someone to get me it. And there were only 3 copies, believe it or not, delivered in Bombay at that time. And I happened to be one of them. So it was a great, it's a paper that's stuck with me for 40 years. Weekly paper, I would say Barron's.
Other two were Ratan Tata sir and
SBHM.
Got it.
Yeah, as late as 98, people weren't reading this paper. Think about it. As late as 1990s, people weren't reading this paper.
अभी भी अगर मैं
अब बहुत काफी हो गया. अब now there's more widespread.
But still, any 22-year-old in India should read these two papers.
I think one of those two papers you should definitely read. You decide which one suits you better. I would read both, but if you can't have the time or the wherewithal, but they're all online now, so you can read them online.
Why are you saying that? Help me understand this also. What in those paper? What quality in those paper?
Ideas. You can read the opinion page, editorial page. the coverage of global companies is absolutely standard. I think sometimes a bit of the other media is self-serving, or they're more independent and objective, I find. And plus, opens up your mind to what's going on in the world.
What do you fear in life at this stage? What's your biggest fear?
My biggest fear right now is ill health because, I'm hitting 67, 68, I'm getting closer to 70. You appreciate a healthy life. So I hope, I've had a few escapes. I am diabetic. I've had some heart issues. So, you deal with it. I'm blessed in many ways, but, ill health, yes.
Are you doing something about it? Do you play some sport?
I do. I have a trainer come in and I, try and take care. I've lost a lot of weight, so that also helps. And, you just try and lead a more balanced life.
Do you play golf?
No, I don't play.
Okay. Tell me one thing in your bucket list, sir.
Well, I'm at the age where 3-4 years were robbed with COVID, so I couldn't travel. And I really enjoy travel. I just like going to different countries and just spending a few days there. So I think, and to add to my good news bucket, I got a Shenzhen visa, multiple Shenzhen visa a while back. So now I can go all over the world because I have all over the visa. So I hope I can travel a lot more than I have had.
Okay. Which screener you use, sir? जब आप मार्केट देखते हैं, what software or tool जिससे आप सब कुछ सीखते हैं? क्योंकि the reason for asking is we are very young. हमको नहीं पता हर जना कुछ ना कुछ बेचना चाहता है. So what to cut the clutter for us?
I use multiple sources without naming sources. If you just want to figure out what the number one tool that I would tell anyone to figure out is what is the market cap of the company. And that's easy to figure out. Number of shares outstanding times current price, market cap, almost any site will give it to you. I don't really run screeners. I try to run, if something piques my interest, then I try to find the market cap of that company, not necessarily of that industry, but first of the company. So I would say, again, market cap.
One fact about NSE that the general public don't know.
About the NSE?
NSE. Because you were also one of the leading members.
No, I wasn't. That's incorrect.
BSE, you were a member of BSE.
Yeah, I'm a member of
One
BSE.
thing about BSE, about the building or certain thing that most of the young people don't know.
Well, I think BSE is over 100-year-old institution. And the important thing to remember is that in 1990s when India liberalized, the BSE already existed for 100 years before that, right? So we already had a quality consortium of good companies that we could invest in, good quality of investors, risk-taking ability that was already available. So thanks to the BSE, it's like what I call a cathedral to capitalism, that India could industrialize after 92 so easily. Well, China didn't have that thing. They had lost touch with the stock exchange. So they started, even today, China is at 25-year lows. I think that really helped that we had a culture of risk-taking, people who understood, investors who understood what good businesses were and how to value those good businesses. That really helped. The interesting thing about the BSE is that the area around the BSE, which used to be so noisy and crowded, now has gone digital, but it's become the fashion district of India, So you'll have all the brand name, marquee names all around in Kalagoda at that point. So it has been a change from stocks to saris or whatever.
What was the best advice? What was the lowest point in your life? And what was the best advice you heard at that time?
Well, the lowest point was, when I came to India, I was dealing with a lot of superstars. And, you wonder whether you fitted into that environment at that time. And by fitting in, you have to prove to yourself, first yourself, that you are capable of sitting on the table with them. How do you prove to yourself that you're sitting on the table with them? You find a 10-bagger, 50-bagger, 100-bagger. There's no other shortcut in this business. You can't say, I'm a great guy, but I haven't picked a 10-bagger or 50-bagger or 100-bagger, So until I got that point, I was always plagued by self-doubt, It's when I got it, I got the confidence that I could match my wits with the best of the best. They were very lucky to me and they're very nice to me and they're very fortunate. That's fine. But I knew I didn't belong in the table until I had proved myself. So, the low point was trying to prove myself in those years. The best advice, buy low, sell high.
One common trait which you have observed from all the people that you have interviewed till now?
Passion. I think that's what it distinguishes. A lot of us on the stock market 24 hours a day. Rakesh is the best example. I think the 25 hours in a day would be in 25 hours in the stock market out there. We're probably not that passionate, but a lot of these people have passion. They do the stock market because they really enjoy it. They really get excited by it, not because of any other reason out there. So I find that people with passion are, clearly someone to watch.
If you were to interview Carlos Sim, what is one question that you would ask him?
That's a very interesting name you came up with. Carlos Slim, to give you a background, was a Lebanese person who migrated to Mexico and became a Mexican citizen and made a fortune of betting on Mexican PSUs. He bought, for example, Telefonos de Mexico and a few other companies. And I remember making a statement saying that I'm always bullish on Mexico. And what I found, amazingly enough, is when I talk to the great Indian investors, somewhere in the line, they'll always tell me, I was always bullish on India. I think it's amazing that just this hypothesis has transformed people's life. Bullish on India means remain invested, no matter what happens, always taking a view that remain bullish. And for 30 years, the index has gone from 800 to 80,000. It's paid off in spades. For Carlos Slim, it is paid off in spades. I could ask a lot of questions to Carlos Slim, but I probably would ask him what made him so bullish all the time.
There is a misnomer because you share common surnames. You are related to RK sir. ये misnomer गलत है, right?
We're not related. We are very close friends. I was introduced to him by my father at that time. And when I actually came back to India, he was already a legend at that time. I've been blessed in the sense that you asked me, how do you get mentors? That he became my mentor. He became my my go-to source for so many things in life. I was introduced to him, and for years we spent time together in the physical ring that was the Bombay Stock Exchange. And to give you a bit of personal insight, there was in 1993 a bomb blast in the stock exchange ring that devastated the range. There's a huge bomb blast in the ring out there. He and I were standing next to each other. Luckily, both of us escaped unhurt from that incident out there. So it's been one of my great privileges of life to know him.
अगर उनसे कुछ चीज हमको सीखनी होती, if you can realize कि what can I learn from guy, हम इंटरव्यू तो देते नहीं है वो, what is something that you will tell us?
He's the world's best listener. He's the smartest guy in the room, but he speaks the least and listens the most. And he listens and then he makes up his opinion. He doesn't care what anyone else thinks, but he listens to everybody's view. It could be the chai wala, the pan wala, to the top fund manager, to Ramesh Damani. It doesn't really matter. He will listen to everyone's opinion. He make up his own mind. He's already figured out most of the things in life. And I think the quality, and there's so many qualities. He's built a successful career as a trader, as an investor, as an entrepreneur, as in the ball bearing business. So many things done well. But I think one thing people don't appreciate about him is what a great listener he is.
How to be a great listener? And give me a story which depicts here he's a great listener.
Well, how to be a great listener, as someone pointed out, we got 2 years, so about 2 years, 1 month, so we got to listen out there. No, see, a lot of people make the mistake of, if you give them an idea, say, for example, is to evaluate the person and say, oh, this guy is always talking this talk, or this guy is always bullish, or this guy is always bearish out there. He's one of the unique individuals who will evaluate the idea on its merits. So how did Rahul Dravid play test cricket? He evaluated each ball on its merits. Is this ball to be played defensive? Is this ball outside the off stop? Is this ball to hit for a 4? Is this ball to be a 6? I think in that sense, he is very similar, that he will evaluate every idea on its merits. So no matter how outrageous the idea or how convoluted the hypothesis, he would listen to you very patiently. And then he would try and say, does it make sense or does it not make sense? And I think that's what distinguished him.
What's the best gift that you have received till date?
Well, that's easy. I think it's my grandchildren. I think I enjoy my grandchildren, Veera and Radha, so much that I don't think I could have got a better gift than just time with them and seeing them grow up. It's why I feel so bad for Rakesh. He couldn't see his children grow up fully. I feel blessed that I can see both of them grow up before my eyes.
Of course. My dear sir, thanks a ton. मेरे पास बहुत सारे questions हैं, but I'll respect your time.
We'll do it in part 2.
100%, sir. And we have a very, very small हम समझ नहीं पाए कि what appreciating asset we can gift you or what book we can gift you because आप इतनी सारी किताबें पढ़ते हो. We were very confused. So we got something very special. If you, I could just,
Thank
yeah.
you.
I don't know how. Please have a seat, sir.
Oh, thank you so much.
इसको हमने sketch करा है. तो I
nice. Very
I don't know
clever.
how close you are looking. I'm so sorry for distorting your face, but
No, it's very thoughtful gift, and you got my hair right. There's very little of it, so it's not a problem about that. It's good. Let me go and study it. But what a great job! Thank you so
my
much.
dear
What
sir,
what an
thank you
honor.
so much. Genuinely grateful.
Thank you.